Hello everyone, welcome back to Swadhyay. Today we are going to discuss the next topic, the next chapter in our subject income tax law, that is residence and scope of total income. This chapter basically deals with two things. One is the residential status of a person for tax assessment, and at the same time the scope of total income of persons. Heading towards our first topic, that is residential status of person. So how to determine the residential status of an individual? Here, before determining the residential status of an individual, let us go through a small concept called stay in India. What does stay in India mean? The stay in India includes stay in territorial waters, that is the 12 nautical miles into the sea. This distance is considered if a person stays in India or in territorial waters that extend to 12 nautical miles into the sea. He is considered to stay in India. And also, the stay in India of any person is not compulsorily to be continuous and active. At the same time, the citizenship, place of birth or domicile are not considered for determining a person's stay in India. At the same time, the date of arrival of a person and the date of departure of a person from India are also included while calculating a person's period of stay in India. Now, how to determine residential status of an individual? There are two main conditions which are to be checked to determine the residential status of an individual. The main conditions are, the first one is the stay in India of the individual should be for 182 days or more in the previous year. Or the second condition is the stay in India of the individual should be for at least 60 days during the previous year, and additionally along with this, the person should have stayed in India during the 4 immediately preceding previous years for 365 days or more. I am repeating it again. The main conditions for determining the residential status of an individual are, the first one is the person's stay in India. The period of stay was for 182 days or more in the previous year, or his stay in India should be for at least 60 days during the previous year, and along with that we have to check if the person has stayed in India during the 4 immediately preceding previous years for 365 days or more. If any one of the main condition, that is either condition number 1 or condition number 2 is satisfied, then we will head to additional conditions to determine the residential status of the individual. If either of the conditions 1 and 2 are not satisfied by the individual, that is his stay in India was for less than 182 days in previous year and at the same time for less than 60 days during the previous year, or his stay in India during the 4 immediately preceding previous years was less than 365 days. In such a case, when the both conditions are not satisfied, the person is considered to be non-resident for tax assessment purpose. But if the main conditions either 1 or 2 are satisfied, in such a case we will head to additional conditions to determine his residential status. The additional conditions are: A. Stay in India was for 730 days or more in 7 immediately preceding previous years. And also, condition B is assessee was resident in India for 2 years or more out of 10 immediately preceding previous year. The additional condition A states that the person's stay in India, the individual's stay in India was for 730 days or more in 7 immediately preceding previous years, and at the same time along with that, condition B states that the individual must be resident in India for 2 years or more out of 10 immediately preceding previous years. If both the additional conditions A and B are satisfied, in such a case, the person is considered to be resident and ordinarily resident. If only one condition or both conditions are not satisfied, if either A or B is satisfied or both A and B conditions are not satisfied. In such a case, the person is considered to be resident and not ordinarily resident, RNOR. There are few exceptional cases while determining the residential status of an individual. Generally, to determine the residential status of an individual, we will go through the main conditions 1 and 2. After that, we will head to additional conditions A and B. But there are few exceptional cases where while determining the residential status of the individual, we consider few other conditions. What are such cases? Let us discuss now. An Indian citizen leaving India in relevant previous year as a member of crew of an Indian ship or for the purpose of employment outside India. Here, an Indian citizen is leaving India either as a member of crew of an individual ship, that is case number 1, or in case number 2, he is leaving India for the purpose of employment outside India. If such person stays in India for 182 days or more in previous year, he is considered to be resident and the tax assessment will be done accordingly. Here only one main condition, that is the main condition 1 is stay in India for 182 days or more in the previous year. This condition is being considered for Indian citizen who is leaving India as a member of crew of an Indian ship or for the purpose of employment outside India. If such person stays in India for 182 days or more in previous year, he is considered to be resident and the tax assessment will be done accordingly. While calculating the period of stay of Indian crew member in respect of eligible voyage, the period entered in the continuous discharge certificate in respect of date of joining the ship and signing off, that is the from date and the to date entered in the CDC, continuous discharge certificate, should be excluded. So, for such Indian citizens, for such persons, while calculating the period of stay in India, the period entered as from and to in the continuous discharge certificate should be excluded. Coming to the exceptional case number 2. The Indian citizen or person of Indian origin residing outside India is visiting India during the relevant previous year and having total income, excluding the foreign income, up to rupees 15 lakh in case number 1 and exceeding rupees 15 lakh in case number 2. I will repeat it again. Here the Indian citizen or a person of Indian origin, he is residing outside India and he is visiting India during the previous year. His total income, excluding the income which he has earned in foreign land, if it is up to rupees 15 lakh, that is the total income of such person arising in India is not exceeding rupees 15 lakh or is up to rupees 15 lakh only. In such a case, the stay in India is for 182 days or more. We have to see if he is staying in India for 182 days or more. If he does, then he is considered to be resident. If such person stay, the period of stay in India is for less than 182 days. In such a case, the person is considered to be non-resident. I am repeating it again. If Indian citizen or person of Indian origin residing outside India is paying visit to India during the relevant previous year and his total income, excluding foreign income, that is the income which is arising in India, is up to rupees 15 lakh. It is not exceeding rupees 15 lakh. In such a case, if the person's period of stay in India is for 182 days or more, he is considered to be resident. And if his period of stay in India is for less than 182 days, he is considered to be non-resident. Here only one main condition is considered. Now, if such person, Indian citizen or person of Indian origin visiting India, is having a total income, excluding the foreign income, which exceeds rupees 15 lakhs. His income, excluding the foreign income, that is the income which is arising in India, is exceeding rupees 15 lakh. Then we have to see his taxable, the condition of his taxability, that is whether he is taxable in other country or not. If such person is not taxable in any other country, The person here, his income, total income is exceeding rupees 15 lakh. Total income arising from India is exceeding rupees 15 lakh, and he is not taxable in any other country. Then he will be taxable in our country, in India, as per the Income Tax Act provisions. If such person is not taxable in any other country, he is by default considered to be resident and not ordinarily resident. He is called as deemed resident. Now, talking about the next case. The person of Indian origin or Indian citizen residing outside India, visiting India during the relevant previous year. His total income, excluding foreign income, that is, the income which is arising in India, is exceeding rupees 15 lakh. And he is also taxable in other country. In such a case, we have to check if such person is ROR or RNOR. To determine the residential status of such person, we have to check the period of stay in India. If the period of stay in India of such person is for 182 days or more, he is considered to be ROR. If not, then we have to check the condition, that is, the period of stay in India for 120 days or more in previous year, and along with that, if his period of stay in India is for 365 days or more in 4 immediately preceding previous years, he is considered to be RNOR. In the last condition, when the person's total income, excluding foreign income, exceeds rupees 15 lakh and he is taxable in other country, we have to categorize him either as ROR or RNOR, and tax assessment will be done accordingly. Such person will be considered to be ROR if his period of stay in India is for 182 days or more. If such person's stay in India is not for a period of 182 days or more, his period of stay in India is less than 182 days. In such a case, we have to see if his period of stay in India is for 120 days or more in previous year, and along with that, we have to check if he has stayed in India in 4 immediately preceding previous years for 365 days or more. If he satisfies this condition, he is considered to be RNOR. If not, he is considered to be a non-resident. Having discussed how to determine the residential status of an individual, now let us go through few illustrations. These illustrations are already given in our institute material, but I have cut short them into simple sentences for you to easily understand. Mr. A, an Indian citizen and member of crew as per continuous discharge certificate, joined the ship on 6th June 2023 and signed off on 9th December 2023. His stay in India for 4 previous years is 400 days, that is in the previous year 2023 to 24. Determine his residential status for assessment year 2024-25. Here, Mr. A, an Indian citizen, he left India on 6th June 2023. As per the CDC, it is mentioned that he has joined the ship on 6th June 2023 and signed off on 9th December 2023. So, while calculating his period of stay in India, we have to exclude this from and to period. That is from 6th June to 9th December. Mr. A left India on 6th June 2023, so he was out of India for the following days. In every month, in June, he is out of India for 25 days. In July, 31 days, August, 31 days, September, 30 days, October, 31 days, November, 30 days, and in December, 9 days. The from and to date are also to be included while calculating while excluding the period of stay. The from and to date entered in the CDC are also excluded while calculating the period of stay of Mr. A. So it totals to 187 days. Now, the stay in India in the previous year 2023-24 is 366 days minus 187 days. Here we have taken 366 days instead of 365 because in the year 2024, it is a leap year, so February has 29 days. So we have taken 366 days and minus 187 days, that equals to 179 days only. The period of stay of Mr. A in India is for 179 days only. So Mr. A is considered to be a non-resident. Second illustration. Mr. B, an Australian cricketer, visits India for 100 days every financial year for past 10 years, and for assessment year 2024-25 determine the residential status. The period of stay of Mr. B during the previous year 2023 and 24 is 100 days only. In the question it has been mentioned that he visits India for 100 days every financial year. So in the previous year 2023 and 24 he must have stayed in India for 100 days. And for the 4 immediately preceding relevant previous years, for the 4 immediately preceding previous years, he must have stayed for 4 into 100 days each year, that is 400 days. So the main condition 2, which states that the stay in India should be for 60 days or more in the relevant previous year, and the stay in India should be for 365 days or more in 4 immediately preceding previous years. The main condition 2 is satisfied. Out of main condition 1 and 2, main condition 2 is satisfied. Now we have to go for additional conditions A and B while determining the residential status of Mr. B. The additional conditions state that he has to stay in India for India for 730 days or more in 7 immediately preceding previous years, and at the same time the person should be resident in India for 2 years or more out of 10 immediately preceding previous years. Coming back to our illustration, this person has stayed for 100 days in each year. For 7 previous years, his stay will be total to 7 into 100 days each year, that is 700 days only, not 730 days. Since his stay in India is for less than 729 days in 7 immediately preceding previous years, Mr. B has not satisfied additional condition A, and hence he is considered to be a resident and not ordinarily resident, RNOR. Now heading to our next illustration. Srinath, an Indian citizen residing in Australia representing Australian cricket team, visits India for 100 days every year in first question, and for 120 days every year in the second question. Find the residential status of Srinath for assessment year 2024 and 25. So in first question it is mentioned that he is an Indian citizen representing Australian cricket team and he visits India for 100 days every year. In such a case, Srinath, being an Indian citizen, has stayed in India for less than 120 days. Hence will be treated as non-resident. We have seen for a person who is an Indian citizen or person of Indian origin, we determine the residential status of such persons as per the exceptional cases. So here he is person of Indian origin. He is representing Australian cricket team, and he has stayed in India for 100 days in the previous year. That means he has not satisfied the condition of 182 days or more, and he has not satisfied the second condition, which states that he has to stay in India for 120 days or more in the previous year. He has stayed only for 100 days in the present example. So Srinath, being an Indian citizen, has stayed in India for less than 120 days. Hence he will be treated as non-resident. In the second case, Srinath has visited India for 120 days every year. In such a case, we determine residential status as follows. Srinath has stayed for 120 days in the previous year 2023 and has stayed for 120 days each year for 4 immediately preceding previous years. That totals to 4 into 120 days each year, that is 480 days in 4 immediately preceding previous years. Here, what does the condition say? The stay in India for 120 days or more in previous year and the period of stay in India for 365 days or more in 4 immediately preceding previous years. If this condition is satisfied, he will be treated as RNOR. Since he has stayed in India for 120 days in the previous year 2023-24 and 480 days in 4 immediately preceding previous years, Srinath is treated as RNOR. And if Srinath's total income exceeds rupees 15 lakhs, that is excluding the foreign income, he will be treated as RNOR. Now, here nothing is mentioned in the question about his total income. So let us consider if the total income of Srinath is up to rupees 15 lakh. That means his total income has not exceeded rupees 15 lakhs. In such a case, since Srinath's stay in India is for less than 182 days, he will be considered non-resident. If his total income is up to rupees 15 lakh, Srinath will be considered as a non-resident individual. Now let us head to the next topic, that is how to determine the residential status of an HUF, Hindu undivided family. We have to question if the HUF's control and management of affairs is situated wholly or partly in India. If yes, the HUF is considered to be resident, and if no, the HUF is considered to be non-resident. But remember one thing, guys, for HUF, we have to further classify its residential status into ROR or RNOR. How is it determined? The residential status of Karta of HUF determines whether the HUF is ROR or RNOR. Generally, for determining the residential status of an individual, we consider main conditions must be satisfied. After that, we consider 2 additional conditions which help us to further classify the individual either as ROR or RNOR. The same applies here also. If the Karta is ROR, then the HUF is also an ROR. And if the Karta is RNOR, the HUF is considered to be RNOR. Here, the HUF's control and management of affairs is situated wholly or partly in India. Then we have to check the residential status of Karta. If the Karta is resident in India in at least 2 previous years out of 10 previous years immediately preceding the relevant previous year, and also additional to this condition, his period of stay in India is for 730 days or more during the 7 previous years preceding the relevant previous year. If both the additional conditions A and B are satisfied, the Karta is considered to be ROR and also the HUF is ROR. If only one condition out of these 2 are satisfied, then the Karta is RNOR and also the HUF will be RNOR. There are few points which you must remember while determining the status, residential status of an HUF. The control and management may be done from within the India or outside India. The place of control may be different from place of business, where the business is actually being transacted. And the business may be transacted outside India, but the control and management may be done wholly from India. Let us go through one illustration. A HUF is transacted from Australia and all policy decisions are taken there. Here the HUF is transacted from Australia. The business is done outside India, and at the same time all the policy decisions are taken in Australia. That means the control and management of affairs of HUF is also done outside India. It means the HUF is a non-resident. Further going into the question, the Karta of HUF is a person of Indian origin who visited India after 15 years and stayed from 1st April 2023 to 1st December 2023 during the previous year 2023-24. Determine residential status of HUF and Karta. We have already determined the residential status of HUF as non-resident because since the business of HUF is transacted from Australia and all the business decisions are taken there, the control and management of affairs of HUF is also done outside India. So HUF is a non-resident. Now, while determining the residential status of Karta, it has been mentioned in the question that Karta is a person of Indian origin. Then we have to determine residential status by considering these conditions. If the person stay in India is for 182 days or more, the first condition we have to check is if the Karta has stayed for 182 days or more in the previous year. We are considering his period of stay from 1st April 2023 to 1st December 2023. 30 days in April, 31 days in May and so on, 1 day in December. This totals to 245 days as the Karta's period of stay in India for the previous year 2023-24. Now, it has been also mentioned in the question that the Karta has visited India after 15 years. So, the Karta is not a resident in India in the previous in at least 2 previous years out of 10 immediately preceding previous years, and at the same time his stay in India will be definitely less than 730 days or more during the 7 immediately preceding previous year. He has not visited India since 15 years. So his stay in India will be 0 during immediately preceding 10 previous years or 7 previous years. Hence, both the additional conditions are not satisfied. Hence, the Karta is considered to be RNOR. Since he came after 15 years, he cannot satisfy additional conditions A and B. Hence, Karta is resident and not ordinarily resident. Also, remember one thing guys, if in the given question, if the business of HUF is transacted in India, if the business of HUF is transacted from Australia and the policy decisions are taken in India, let us consider, for example, the control and management of affairs of HUF is done partially in India. In such a case, the residential status will be, the HUF will be resident. Now we have to further classify its residential status either into ROR or RNOR. In such a case, if the residential status of Karta is RNOR, the HUF will also be RNOR. But in our given case, since the HUF's business decisions are taken outside India in Australia, we have classified it into a non-resident. So the HUF is non-resident and Karta is RNOR. But in the other case, if the control and management of affairs, that is the business decisions, are taken partly in India, in such a case we classify the HUF as resident. And further we have to classify it into ROR or RNOR, which will depend upon the residential status of Karta. Hence, since the Karta is RNOR, in such a case the HUF will also be RNOR. And also, the classification of residential status into ROR or RNOR is only applicable for individuals and HUF. For other persons like companies, AOPs, body of individuals, we do not further classify them into ROR or RNOR. We only classify them into either resident or non-resident. Now we have completed discussing how to determine the residential status of individual as well as HUF. Heading to our next topic, how to determine the residential status of firms, association of persons and body of individuals or local authorities or artificial juridical persons. For all these persons, the determining factor for the residential status is the control and management of affairs. Simply, if the control and management of affairs of such person is wholly or partly in India, he is considered to be resident. and if the control and management of affairs is wholly outside India. Wholly outside India. That is, no decision, no business decision is taken in India. In such a case, he will be a non-resident. Residential status of partners in case of firm or members, it is immaterial. While we are determining the residential status of firms or AOPs, body of individuals, local authorities, or artificial juridical person, we only determine it based on the control and management of affairs. That is the where actually the brain of the person lies, the control where it is exerted. Next topic is residential status of companies. While determining the residential status of companies, we have to check whether the company is Indian company or not. If it is Indian company, that is the company is incorporated in India, in such a case it is resident. There is no need to further go into any additional conditions. We only check if the company is incorporated in India or not. In such a case, if it is an Indian company, it is resident of India. If the company is not an Indian company, then we have to go for POEM. POEM means place of effective management, that is where the key management and commercial decisions necessary for conduct of business of an entity as a whole are in substance made. So where the key management and commercial decisions which are necessary for conduct of business of the company is made, where the business decisions are made, such places called the place of effective management. If the POEM is in India, that is a key management person, such persons are the decision makers, they are resident in India, then the company is considered to be resident in India. If the place of effective management is outside India, the company is considered to be non-resident. There is no further classification into ROR or RNR. Simply we have to see if the company is Indian company, then it is a resident. If it is not an Indian company, we have to check if POEM is in India or outside India. If POEM is in India, the place of effective management is from India, then it is resident. And if the place of effective management is outside India, then it is considered to be a non-resident. With this, we have discussed how we have to determine the residential status of an individual or HUF or company or any person as per the Income Tax Act provisions. Now, the next topic is the scope of total income. In this chapter, we have completed the first part which deals with the residential status of persons. Next comes what is the scope of total income of person. Let us discuss the scope of total income, the incomes which are accruing or arising in India, the incomes which are deemed to accrue or arise in India, along with one master example in the next video. Thank you for watching, guys.